Hey everybody, welcome to the November 15th edition of Wall Street Winners. Just keep racking up the profits. Gotta love it. And of course I love this more than anything at all. Okay, S&P continues on its run as we have been telling you. It's bullish. It's bullish. It's bullish. You've got to be long. There's going to be problems next year, but right now is time to be long and strong and doubling up on the size of your positions. Got it? Very simple. So we got a little bit of a dip. Now we're starting to rally back up again. We're going to continue to make new highs here all the way through the end of the year. Seasonally bullish. Let's carry on. Now, over here in the Dow, not as strong. We don't want to be in these Dow stocks. Look at the green line there. That shows the buying pressure. I told you last week it was unsustainably high, so it came down. And of course, we also saw, as I told you last week, that the selling pressure was unsustainably low, so it rallied as well, but nonetheless, still a clear advantage to the buyers. That means it's a bull market. Okay, NASDAQ, Purple Predictor starting to increase its lead over the price. That's bullish on the NASDAQ. So right now, my main focus is going to be on NASDAQ type stocks, then S&P, then Dow. Seasonality remains solidly bullish. You can see we got solidly bullish a week or so ago. I told you last week, from now on, we're going to be putting on 50 to 100% larger positions than we normally would because we're in a seasonally bullish period. We've got a very strong tailwind behind us. This is how you make the massive money. This is how you have this newsletter be the number one performing newsletter for 5 years in a row. Okay, that's how you do it, is by changing your asset allocation when the times are good. Double up, 50% up, whatever it may be, but you've got to be putting on bigger positions than you normally would. Now, seasonally, so far, the purple line up here has worked the best, and it's saying that this week is going to be kind of boring, but okay, I'll take it. Now, our asset allocation shows that plenty of money is coming into this market from the bond market. So this is sustainable because bonds are a huge, huge market. We always look at sentiment. But what we really look at, everybody looks at sentiment, but what we look at is where's the money coming from? And right now we know the money's coming from the bond market. Once again, a unique indicator that nobody else looks at, but of course we're here to show you what's really going on. Risk also. This is another thing in favor of the NASDAQ over the Dow. They want risky stocks, so look for technology stocks, medical technology stocks to outperform the market. Of course, our portfolio is filled with these kind of stocks. Our fully paid up members know that. Now, global shares still have yet to make a new all-time high, so we don't really want to be in global shares right now. Now, the yield curve is starting to pop back up again here, but I think we're going to kind of stagnate around in this area. We're not going to break these highs up here. We're not going to break these lows down here. Look for the yield curve to remain positive, but not wildly positive. Now, bonds. You can see right here. Well, let's go to the next one right here. Here's our bond key factors. CRB kind of was saying we'd get higher yields. Gold saying we're going to get higher yields. But 10-year treasuries in Germany are going down. And that is the most important factor for treasuries. So I'm going to say we're going to kind of see bonds stay about where they are right now, or yields go down, not up. That would mean bonds would go up. The dollar strong. We've been highlighting now for months about, I know it sounds insane if you only look at the U.S. and you say, oh my God, they pump so much money into the economy that the dollar's going to go to zero. We're going to have a dollar collapse. No, we're going to have the opposite of a dollar collapse. We have a melt up in the dollar. So you always have to look. Whenever you look at the dollar, you have to look at, well, what are the other people doing? Yes, the U.S. monetary policy is insane. But Europe's is even more insane. Japan's is even more insane. People's Bank of China is even more insane. The asylum is filled with insane people, and believe it or not, Generous Jerome Powell is the least insane of all of them. He's still on his meds. So look for the dollar to continue to rally because the U.S. has the tightest monetary policy of major central banks, which is just insane. But there you go. Got to be long the dollar. Now, here's the unusual thing. The dollar is going higher, but gold is exploding to the upside here. We've been highlighting about wanting to be long gold. We're now going to get long gold. That's the way this is going to be. Big, you can see it here, big pennant formation. And I think it's fairly legitimate. We should have seen a decline in, well, anyway, nonetheless, it's an important breakout. Gold key factors, right here, this one's slightly bullish, neutral, slightly bearish, but fully paid up members, when we get to your section, you'll see why gold is exploding. And we want to be long gold. Not heavily long gold, but we want to be long gold. Crude oil. Now, the global economy is weakening. So I'm now thinking that we've seen the highs in crude oil. Demand is actually going to start to decline slightly. And at the same time, we are under threat of a strategic reserve release by President Joe Biden to try to dampen down gasoline prices. So I think the threat of that is there. The Saudis did release a little bit of oil, but there's a threat that they're going to release more oil from their strategic reserves. And if anything, we're going to see OPEC Plus increase production, not decrease it. So look for oil now to kind of stay in a really sluggish bear market. I don't want to be shorted. It's not going to be much of a bear market. I like to go where the action is, and oil is no longer where the action is. Okay, Bitcoin, we told you stay long. It made new highs, all-time highs. So that's been the correct advice. We're the only ones that are sitting here telling you how to trade Bitcoin and oil. Nobody else is doing that but us. Okay. Freebies. You know what you need to do. You really need to subscribe to get the fully paid up version so you can get the actual trades that I'm using to make money on all this move. So go to WSW2021.com, sign up and become a fully paid up member and be one of the cool kids.